Okay, good morning. It's December the 31st, 2015, and it is a holiday trade. Most banks around the world are closed today, and you can see it reflected in the overnight volumes we had. When I took the numbers down, we had 34,000 trading in the E-mini and 51,000, contrasting with that's less than half of what we had yesterday. So without large bank participation, the markets will suffer volume-wise, and it really puts us into a situation where it's us against them, other traders and large traders who really have the capital and the knowledge and know how to work the market. So my guess is we're going to look at a trading range today, all markets considered. Equities will trade normal hours, close at 4 Eastern. Currencies and interest rates go off at noon Central. Crude and gold will have their normal day session closes. So things are going to get pretty thin after noon Central, with a lot of the players leaving the market except for the equities. The bias on the last day of the year is to close up, not on a down note. Now, yesterday's equity market got hit into the close, and it's selling right now. So we'll have to see how that plays out. So right now, given E-mini weakness, I think this market will trade up, but I don't think it can break out. So we've got resistance at 28. We've got this spill from basically 126 even. So 28 to 126 even is resistance. So 27 to 31 is sell 1. 3 to 7 is sell 2. And a lot will be dependent upon what happens in the E-mini. On the buy side, typically we have a pause day, so we've got volume at 17.5. We've got volume up here at 29.5, so 17 to 21 will be buy 1, and then 9 to 13 will be buy 2. Today's news: jobless claims 270. Chicago PMI, it was 48.7 last month. They've got it at 50.4. Anything over 50 shows growth, right? And natural gas inventories, minus 54. We have not had uniformly cold weather. The big draw will come next week off of this week's cold weather. So I see a trading range market, and resistance, best resistance is 126. Hopefully I get everything figured out today and debugged. So far the transition to Windows 10 has been actually pretty smooth. Haven't had any problems with it. It's always a little bit different. There are some things like your Explorers and your browsers, etc., that are, because there's a real heavy push for Microsoft product, is where the issues have been. Okay, we had resistance basically at 24 to 54.02. We got a high volume number at 26. The high is 26. So we got the spell from 54.02. So 25 to 29, sell 1. 54.01, 54.05, sell 2. Picking up, leaning against that high volume number right there. I believe this volume will control it. To the upside, this volume to the downside. We're quite a bit of ways away from 53. The break right here is at 17, so 13 to 17 is buy 1. And then getting stops below the overnight session low. We got this R10, so 5 to 9 will be buy 2, and basically looking for a trading range. Okay, looking at gold. Gold was very quiet. They got stops below yesterday's lows. We had a 55, 57 buy. That looks like reasonable right now. And then 51.49 for buy 2. Kind of where we were. Got resistance a little bit lower, so 60 to 62 is sell 1. And then we'll make it 64, 66, sell 2. Don't look for big things out of gold today, obviously. Most of the players are on the sidelines. With the German central bank closed today, the German banking holiday, don't see that we've got a lot to talk about in the euro. Volumes are extremely light. I don't think we'll have much in the way of play. Out of our markets, again, markets in the hands of traders. Volumes extremely light. Pretty clean break here. At 1920, got a single print right here. Last rotate up was 35, so this 20 to 30 area, sell 1. 40 to 50, sell 2. On the buy side, 109, buy 1. 875, buy 2. Okay, crude is under pressure. There'll be articles, what I've, in my experience, this is my 4th bust in the oil patch, and it takes 18 months to 2 years for it to work its way through, and we're at 1.5 years right now. So I don't think the selling is necessarily over. Then the bottom is bottoming process. In the past, when we've had recession, inventory-induced recessions, the market can come around pretty quickly. But what we have right now is, I think, 1 point, I forget the number, but storage is maxed out right now above ground. And if the economy doesn't turn around and move out quickly, it's going to hang over the markets for quite a bit. So the bottoming process could take probably in the process of bottoming right now, could run through June of 2016. Then we might have 1 year to 2 years to work off the inventories. So we'll just have to, I don't think anybody's going to be in a hurry to add length to the actual physical crude oil, but people might start thinking about in the 6-month window buying oil stocks. Remember, before 2008, prospects were only drilled if they were economic in the 30 to 40 range, and that's where we are right now. And there are those type of prospects still out there, like the state of Kansas is still profitable at these prices. So crude oil is pointed lower. 36 stops below 36, so 35.75, 36 buy 1. 35.50, 35.25 buy 2. On the sell side, 36.50 to 75, sell 1. 37, 37.25, sell 2. And to the mini. A lot of selling going on beneath the surface by large institutions. This is an election year. It'll be interesting to see how it does play out, because typically the economy is pumped in the election year. The new regime comes in. Don't you love that word? Excuse me, the new administration comes in, and then the recession is over the first year, 2 years of the new administration's run, and it gets pumped again. But the economy has been pumped for 8 years by this administration, and the ability to pump and do stuff is not nearly what it used to be. So right here we have this rotate up that took us on. If we get all the distributions put on where they are, you can see that the 45 to 50 area, lots of stuff comes in. You can see that Globex low right there. You can see we're right at the Asian lows that took the market up to north of 80. So we're right now at support. And we do have news today's jobless claims, 270, 274 is the highest I've seen. Chicago PMI is the number that most people will key off of. 50.4, it was 48.7 on the last go around. And natural gas inventories will only play at the NYMEX, minus 54. So how strong is the selling? So we got this bias of an up close, which so puts us in this 55 area. So 55 to 60 is probably pretty good resistance. Then 65 to 70, picking up this area right in here, would be the next band. Got this high at 64. Have the spill from 53, so 54, 56, sell 1. 59, 61, sell 2. On the buy side, we've got this support starting at that, a little bit lower, so 47, 45, buy 1. We've got this volume down here at 40, 40, 42, buy 2. Basically, resistance 55 to 60, support 45 to 50 to get started. And I think at some point today the market will rally back to give everybody at least an up close so they can enjoy the long weekend before coming back and having to deal with the market and reality on the 4th. It'll take a bit to get everything up and around. I'm going to be in and out today. I won't have a full schedule, kind of like yesterday. Our volumes are going to be light. It's going to be holiday trading. I'm going to see if the recording worked, how it turned out on this new Windows 10 setup, and I'll be back with you in a bit.